Atul, has the E bit of ESG been put on the back burner?
Uh, that's an interesting topic, and that's got many different dimensions to it. So, firstly, I think it's important to emphasize that for the short term, at least, the S certainly seems to be grabbing the headlines. But that is not to say that E is not important. It's just that it's not on the headlines. I would put it this way: that if you look at it from the flavor of the day, in a way, is the S, but what's permanently on the menu is all E, S, and G. So I would say that just that the plat du jour is S, and it's not E, which is the plat du jour. But the importance of E continues to get stronger and stronger. And as the pandemic is teaching us, we are living in a low carbon, at least temporarily living in a low carbon footprint environment, because we are traveling less, we are using the flights and the cars much less. So that is resulting in better air quality, and that has a big impact in terms of our lifestyle. So I think it will come back, but the blessing in disguise from the pandemic is clearly that we're living in a low carbon footprint. Another important aspect that I would like to highlight is that while we see a lot of what's visible is that investors are very highly focused on ES and G, we are also seeing that that the intermediaries, that is banks, are hugely conscious of it and of this as well. And many banks have announced that they're exiting businesses which are polluting, and they are starting to reduce the exposure to this from a loan perspective and from a client perspective to industries that are polluting. So that is something that is fundamental shift in the business. Another important aspect is that if you look at issuers, you see that issuers that are in carbon emitting industries, including companies in the oil and gas sector, they're moving towards carbon neutrality and are talking about a path towards carbon neutrality. That is a permanent shift in the market, and it's not going to reverse. And last but not the least, the most important part, which is very below the radar and which is not so visible, is what's happening with investors. We are seeing that on the investor side, if in the past they were putting the first filter was, let's say, credit quality and price of the credit, now and then the second filter was the ESG aspect. We are seeing that for a lot of investors, they've switched it. The first filter that they're looking at is the ESG aspect, and only then are they starting to look at the credit from a relative value and a price versus credit perspective. This is a fundamental shift, though I don't think it's happening all over the industry as yet. I don't think all investors are on the same level as yet, but a lot more investors today than before are using this filter first. The ESG filter is the more important filter for a lot of investors, and this is a fundamental shift in investor behavior, and this is a fundamental shift in our credit markets.
Thank you. So we've been operating in crisis since early March, certainly in Western Europe. What have capital markets got right, and what have they got wrong in that time?
Yeah. Here again, I think the two aspects. One is that if you compare this crisis with previous crises, in the previous crisis, we saw that the financial system was frozen. It just could not react because there was a liquidity problem, there was a balance sheet problem, solvency was an issue, and it was the banking system was basically dysfunctional at that point in time. At this point in time, we find that thanks to a lot of work that has been done by regulators, the governments, and the banks are far better placed, and from a balance sheet and a liquidity perspective. So from that point of view, we can see that the banks are well placed to remain fully functional. That is one. Second, in the last crisis, we were not sure on, because the banking system was frozen, transmission of credit suffered, and as a result, the corporate base and the issuer base suffered. In this crisis, we are seeing clearly that because the banks are better placed and are in a good position, They're able to transmit the credit through the system, and they're able to support their clients in fighting the crisis and fighting the pandemic. So to put it another way, in the last crisis, the banks were part of the problem. This time, in this crisis, the banks are part of the solution.